Well, now an economist, Aliyu Audu, joins me now from our Abuja studio for more on this discussion. Good to have you join us, Aliyu. Let's start with comments from the CBN now. Earlier on, the CBN governor, Godwin Emefiele, who says Nigerian banks are healthy vis-a-vis the need to have stress tests. What do you make of this report?
Well, I didn't get the last part of your question, but I believe you're talking about the CBN governor saying Nigerian banks are healthy. Yes, Nigerian banks are actually more healthier than they used to be some couple of years back when we had the financial crisis and a lot of banks went under and the CBN had to intervene. So I believe they are a lot healthier now and are actually trying to engage in proper banking. You know, since the creation of the TSA, there is no more public sector funds in banks. So banks are concentrating on doing proper banking, real sector banking, and obviously that is going to make them healthier because there is no unnecessary trading.
Let's now also talk about the loan to deposit ratio, which is now pegged at 65%. How does this come to you?
You're talking about the loan
to deposit ratio,
yes. Loan to customer deposit ratio. Yes, yes, absolutely. That is a good thing because, as you can see, the economy is starved of finance. And what we have been advocating all this time is how do we get finance across to businessmen? So a movement from 60% to 65% by the CBN governor encouraging banks to begin to give out loans is actually something very good because more loan in the economy helps businessmen, helps the real sector to go into production. So it is a good thing that the CBN governor has advised and banks to move from 60 to 65% in terms of customer deposit to loan ratio.
But so many have also said that, well, this is also putting quite a stress on banks in Nigeria. Do you think of that as well?
No, I don't think so, because naturally banks, you're supposed to be, you know, doing proper banking and, you know, working with the real sector. That is what banks are supposed to do. Banks are not supposed to invest most of their deposits in treasury bills and sit down and wait for return on treasury bills. That is not supposed to be so. So, you know, we want banks to engage in proper banking. They should go out there and take some level of risk. They should not just sit down and, you know, invest majority of their deposits in treasury bills. That is wrong. So if banks, this is putting a stress on banks, then banks should go and, you know, deal more with treasury bills and invest more in the real sector. As I've said before, they should put boots on the ground. I was a banker for 12 years. I want them to go out and reach out to businesses, do your due diligence, know your customer, and give out the loan to the right customer and follow it up so that your customer pays. It just calls for proper banking and, you know, not what it used to be some years back.
And talking about proper banking and also knowing your customers, some have also said it's important that we have synchronized bank customer details, especially to deal with bad loans or defaulting customers, so that then we can track this situation down and then we have a larger loan to deposit ratio. What do you make of this?
Yes, it is. There's what we call the credit bureau that has been introduced. All this is doing is to improve the financial sector. When you have a credit bureau data, that means if a customer defaults with one bank, it will be on the record that he defaulted and he cannot go to another bank and get a loan. So it just makes it easier for banks to know your customers. It's part of the KYC process that was introduced. I mean, in foreign countries, if you need to get loan, you need to have some sort of history. So this is what is happening here now. And that is very good. It's, as I've said before, it's going to make banks work harder and, you know, do their, carry out their banking activities more so that you will be able to differentiate between a good and a bad customer, and that will protect you as a bank. You can't just lend to anybody. Gone are the days you have to lend to somebody because he works in the public sector or because, you know, he has this a huge amount of money. Gone are the days. This is the time to do banking, real sector banking. You don't have to give out big loans. You can give out small loans to small businessmen as long as they meet up to your requirements. So what this is doing is creating sanity in the banking industry. And that, in the long run, will stop our banks from collapsing like we faced a couple of years back. We had Oceanic Bank collapse and a couple of other banks. So what this is bringing now is sanity, proper banking into the banking system, and it can only be good news for Nigeria and Nigerians. Thank you.
Just led me to the next question I was going to ask. Let's now go back to McKinsey's report, talking about return on equity now. Revenue growth has decreased from 23% 7 years ago to about 1% at present. This is quite a reality, wouldn't you say?
Yeah, that is good. Revenue is decreasing. What you have to understand is that now that revenue is decreasing, if you compare banks in Africa to banks in other countries, the return on revenue is lower in other countries and is higher in Africa. Now, turning the other way around, if you go to other countries, the public has access to finance more than here. What am I saying? I'm saying that the cheaper you make it for lending, the cheaper your interest rate is. Currently, ours is minimum is 14%, and it goes up to 20 whatever percent. The cheaper it is for you to lend, the better it is. So now, banks should not focus so much about profit at the end of the day. They should focus on reaching out to different customers. And if you are able to reach out to different customers and you have lots of customers, in return you're going to make this profit. So what is happening now is a transition from reckless banking into proper banking. Now, that is why we are losing this profit that banks were making by round tripping, giving out loans to the wrong person, exceeding their single obligor limit, which is against the CBN rules. We're now facing a situation of sane banking, no more public sector, focusing on the real sector. And as such, your profit is going to reduce. When you start doing the proper banking and reaching out to the customers, we have 200 million Nigerians, 50 to 100 million active Nigerians. Reach out to them through student loans, reach out to them through business loans, reach out to the Women's Society through loans, reach out to the agricultural sector through loans, manufacturing as well as mining sector, and the banks will grow. So we are now encouraging the banks to do proper banking and reach out to these sectors, and they will make the profit over time.
And how much of a problem would you say the multiplicity of banks in the country creates, looking at customer choice being identified as a major challenge? You've already rightly mentioned that we have to focus on segments and products to reach critical size and segments. How do we go about this time around, being intentional?
Well, if I understand your question correctly, you're talking about how banks can reach out to customers. Yes, we have a very vibrant economy. We have the largest economy in Africa. We have the population as well. So we have various sectors: manufacturing, agricultural sector, textiles, industries, and what have you. Now, we now need to employ professionals that will sit down, design good products to reach out to this sector. Even the media industry, there should be a product for every sector. And as such, you get people actively engaged. This is where you make your revenue. So I think it's important that it's no banking as usual. We should reach out to people. We should get people to think. We should employ qualified people into the banking. Bankers should not be going after getting public sector funds. Rather, they should sit in their desk, go back to the drawing board, think about products that can reach your customers. No more, the banking. When I was in banking, we all have to go out and look for big deposit. We don't need that anymore. We need products. We need talents. So the banks have to look inward and develop product to suit the market. And remember, we have a very big economy, 200 million people in this country. We have a huge agricultural sector, manufacturing. So the products, we need a lot of products.
Okay, Aliyu, before I let you go now, let's quickly talk about...
the banks to go out there and look for good products to suit.
Okay, but before I let you go, let's talk about our current realities when we are talking about automated teller machines, online banking, and a whole lot more. We still have infrastructural challenges here and there, issues of network and much more. Now, as we are counting down slowly to the end of 2019, how do we also get things right, building on banking infrastructure going into 2020, talking about ATMs and online banking and how we should have our charges properly regulated?
Well, that is the function of the CBN in terms of regulating charges as well as customer advocacy groups. You know, I think so far in terms of online banking, ATM banking, I think the charges have been reduced. I think if you're withdrawing from your bank, you don't get charged. If you go into another bank to withdraw, you get charged 65 naira. It was a lot higher before. I'm not sure of the charges for online banking, but various banks have various charges. Now, I think in terms of that cost, it's been reduced. Well, ultimately, we're trying to make the cost zero because banks are already making a lot of money through bank charges and other charges. So why should you know, charge a customer just for going to another ATM to withdraw? You know, so I believe online banking, our online banking and ATM is quite advanced, more advanced than most countries. So I'm not very worried in that area, but I think there's a lot of changes that need to be done in the banking industry, and mostly in terms of reducing our interest rate so that we can reach out to our customers. We want people to have finance. Now, you know, finance is a major driver of the economy. If you go to many countries, finance is helping a lot of people, reducing poverty, improving businesses, and, you know, helping the economy generally. So we want everybody, the way you have access to water, the way you have access to food, we want you to have access to finance. So it's for banks now to develop products that people don't have to walk into the bank. You can sit in your house, apply for finance, and you get it the next day within the shortest possible time. When there's finance available to people, you notice that the economy will pick up, people will have access to finance, crime will reduce, you know, other sectors of the economy would develop. And we're experiencing border closure now. So this is an opportunity for banks to key in, provide finance so that people can begin to, you know, come up with different businesses and, you know, because the market is there now anyway. Thank you.
Okay, thank you very much for your contribution. It's been a pleasure speaking with you. Aliyu Audu, we've been speaking with an economist on the McKinsey report and much more within the banking sector.